Hello investors, welcome to our channel. In November 2023, just 2 weeks before his passing at 99 years old, Charlie Munger, the legendary partner of Warren Buffett and vice chairman of Berkshire Hathaway, gave his last interview. Munger wasn't just an investor, he was a polymath, a business architect, and a philosopher of practical life. And in this final conversation, he distilled almost a century of wisdom into powerful lessons about investing, risks, and how to live a sensible life. Today, we're going to dive deep into this interview and pull out the most important teachings every investor needs to hear. Stick around until the end, because the last lesson is perhaps the most profound of all. Let's get started. Part 1. The foundation of a master's mind. To understand how Munger invested, we first need to understand how he thought. And his secret wasn't in complex spreadsheets, but in something he called mental models. Munger was inspired by Benjamin Franklin, a man who educated himself in many different areas. He believed that to make good decisions, you can't just be an expert in finance. You need to have a network of mental models, the big ideas from major subjects. Munger: I studied math, physics, meteorology, and engineering before I went to Harvard Law School. Of course, I did that intentionally. I could see the power of it. He gave the example of his professor Lon Fuller, who brought together law and economics. For Munger, understanding how incentives, an idea from economics, shape contracts, an idea from law, was super important. The investor takeaway: stop looking at the market only through the lens of finance. To understand a business, you need to understand consumer psychology, competitive advantages, industry history, and human nature. The real advantage isn't in knowing more about finance, but in understanding the world better. This brings us to a contradiction in Munger, a mix of arrogance and humility. He had the confidence to question everything. Munger: I recognized that Sigmund Freud was a crazy horse when I first read him in high school, and I decided I wasn't going to learn that from my Latin teacher. At the same time, he was really honest about his limits. He knew he wasn't a mechanical genius like his childhood friends, the Davises. Because of this, he stayed away from businesses where he didn't have an edge. The investor takeaway: have the confidence to do your own analysis and question what everyone else is doing. But be really honest about what you don't know. Knowing the limits of your circle of competence is more important than trying to make it bigger. Part 2. The investment strategy. Munger's biggest contribution to Berkshire Hathaway was perhaps his improvement on Ben Graham's method. Ben Graham was famous for buying cigar butts, terrible businesses, but so cheap that they still had one last puff of value. It worked for a while, but Munger saw a deeper truth. Munger: I immediately saw that Graham was wrong. The real money was in the truly excellent companies which carried you up and up and up. That's the main idea of Berkshire's philosophy today. Instead of looking for deals in average businesses, they look for very high-quality businesses that can grow in value for decades, like See's Candies and, later, Apple. The investor takeaway: the quality of the business is what drives long-term returns. It's much better to pay a fair price for a fantastic company than a fantastic price for a fair company. And once you find these companies, what do? According to Munger, almost nothing. He called it sit on your butt investing. Munger: it's what I call sit on your butt investing, where you wait for the big fat pitches. The world isn't going to give you a real opportunity very often. And when you get your invitation, for goodness sake, don't take a small portion. He used the example of basketball coach John Wooden, who spent 90% of game time on his 7 best players. Munger believed that an investor's life only offers a few golden opportunities. Too much diversification for him was a way to protect against not knowing enough. Real wealth is built by focusing. The investor takeaway: patience and good decisions are your biggest strengths. Spend most of your time reading and waiting. But when a clear and amazing opportunity comes up, you need to be brave enough to bet big. Part 3. Managing risks in the modern world. Munger was very clear: the game has gotten harder. Munger: it's much harder, you wouldn't believe it. The low-hanging fruit that Ben Graham had because of the Great Depression is gone. He was doubtful that areas like venture capital could repeat their amazing past returns, simply because the competition is much tougher. For us, the lesson is clear. Keep your expectations in check. The easy returns, if they ever existed, are long gone. And how do you manage risks? First, by learning from mistakes, others and your own. The story of Kodak taught him that even the most powerful company, run by a genius, can go out of business. Technology is a strong force. His own mistake with Alibaba was more subtle. Munger. My worst deal was buying a block of Alibaba, a very good company, but I think it was overpriced and Jack Ma made mistakes in dealing with the Chinese government. The investor takeaway. No company is too big to fail. Understand the risks of new technology coming in, and importantly, the political risks that don't show up in financial reports. And what about the geniuses of our time, like Elon Musk? Munger. I put Elon Musk in my too hard pile. I would never bet against him, but I would never bet with him. He's been on the brink of going out of business maybe 2 or 3 times. How many people can do that without falling apart? The investor takeaway. You don't need to have an opinion on everything. It's perfectly smart to admit that some things are too complicated or unpredictable to figure out. Stick with what you understand. Part 4. The final wisdom. In the last few minutes, the interview became less about money and more about wisdom. Munger's main idea can be summed up in one word: inversion. Munger. Invert, and try to figure out where you don't want to be. That's what everyone with any common sense does. Avoid foolishness at all costs. Foolishness is much more common than you think. Instead of asking, "How can I succeed?" Munger asked, "What could make me fail?" And then he avoided those things at all costs. Too much debt, dishonest people, extreme beliefs, and of course, stupidity. The investor. Takeaway. Before you buy a stock, do a pre-mortem. List all the ways this investment could go terribly wrong. Avoiding stupidity is easier than trying to be a genius. Finally, the most human lesson of all. Munger faced terrible hardships, including losing his 9-year-old son to leukemia. His way of dealing with pain was simple. Munger. If you soldier through, you can get through almost anything. It's your only option. You can't bring the dead back. You can't cure the dying child. You have to keep going. You can cry, that's okay, but you can't give up. This toughness is what makes great investors different from everyone else. The market will hit you hard. Your best ideas will fail. There will be times of panic and pain. Your only choice is to keep going. He lived in the same house for decades, not because he couldn't afford a bigger one, but because he realized that the traps of wealth often bring more unhappiness than joy. The goal wasn't just to get rich, it was to stay sensible. So, what can we learn from Charlie Munger's last lesson? Think broadly. Build a network of mental models to understand the world. Focus on quality. Buy fantastic businesses and be patient. Be decisive. When opportunity strikes, don't hesitate. Always invert. Avoiding disasters is the safest path to success. And keep going. Resilience in the face of trouble is the most important quality of all. Charlie Munger taught us that investing isn't a computer game. It's a game about businesses, people, patience, and most importantly, being sensible. His wisdom will continue to guide investors for generations. What was the Munger lesson that stuck with you the most? Share your thoughts in the comments below. If you liked this video, don't forget to like and subscribe. Thanks for watching, and see you next time.